What's going on, guys? Get started in a minute. Happy Tuesday. Hopefully everyone's doing well. Just give me a mic check. At this point, I know that some people complain that there's like a buzzing sound in the background. About half the people identify a buzzing sound, and half the people say that there's nothing that they hear, and or they don't hear anything. And when I listen on my end, I don't hear anything as well. So I'm not really sure what the cause of that is. But we'll get started in a second. Bitcoin is pumping. Yeah, it's pumping in the wrong direction. Get a few more people in here. Make sure you hit the like button, hit the subscribe button. You have to be subscribed to my channel because God knows that I get on here so often that you can't afford to miss a stream. All joking aside, I very infrequently go live lately. But I always say that I'm meaning to get on more, but it's just that I can't bring myself to be as interested in doing it, I guess, right now. It's been a really good market, which has allowed me to take more time away from the desk. And I have a going on 16-month-old now who just learned how to do a little bit more than walk. So the days are spent chasing her around. I'm enjoying that. But I know how I am the pendulum with all things swing both ways, and with me as well. Like I go through these periods where I take a little bit of time away from the market. Never completely, but just I try to identify the periods where I could be a little bit more hands off, and this is especially important for someone who spends the majority of their time trading lower time frames, and like I say, anywhere from 2 minutes to 2 weeks. So when I identify a period where I could step off a little bit, or rather where active management will actually hinder my performance, I try to take advantage of that. There are times when it's easier to identify than others, and for the last few months, obviously it's been better for you to not micromanage things, and I've taken advantage of that time. Anyway, so no buzzing. Good stuff. Good stuff. All right, let's get right into it. Let me change the screen here. I think we're all set up, right? Got a good amount of people. Yeah, so hit the like button, hit the subscribe button. I'm going to try to get back onto doing this at least once a week. I was doing it 3 times a week, and then again, just became a little too much. But hit the like button, hit the subscribe button. If at any time you are interested in any of the platforms that I'm sharing or things I talk about, check the description below. There are a bunch of links. There are a bunch of specials still. So there's a bunch of different exchanges and platforms that you'll see me use from time to time, depending on what we're trading, where it's trading, and what tooling or software I'm using. If it's not listed below, some of them are, I don't think I have links for everything. And I'm not talking about like giving you a ref link for Velo. But if you see something and you're wondering what I'm using, just shoot me a DM. And I'd be more than happy to point you in a direction that I think is good in terms of products, software. You know, the market is kind of keyed into this at this point. Like everyone knows what platforms are the best platforms to use. But some people are tuning in for the first time or are not on Twitter and are just not familiar with all the tools available, the software available, and there's a lot. So anyhow, you'll see me share new things from time to time because I enjoy trying out new platforms and new software, even though I have the things that I've been leaning on consistently for a while. Anyway, let's get right into it. Has this started yet? No, it's starting right now. It looks like you might be referring to actually the government Bitcoin that was just sent, and I don't know, is it confirmed yet? It's not up on, it's not on Arkham yet. Oh, wait, is that it? Did something pop up? No, nothing popped up yet. But yeah, it looks like some of that Silkroad BTC was sent to Coinbase Prime, and you have to imagine at some point that balance is going to reduce, right? I don't want to say go close to zero, but you have to imagine that they're going to be offloading that, unless you have a belief that the United States is looking to build a bag. But at higher prices, you know, we've run into a good amount of profit taking, and There's some more obvious counterparties than others. I don't know why this is happening. I think it's because my laptop. Some more obvious counterparties than others to pay attention to, and I think the United States government coins are definitely one of them, and that's because people tend to have a really negative response to any kind of movement, and get a little spooked, especially when the market has consolidated for the better part of a month, right around prior all-time highs, and everyone's either half the market is waiting for the other shoe to drop, and the other half is waiting for us to break out to the upside and make new all-time highs. But it looks like that's why we're seeing a little bit of a response right now. We did see a sell-off across the board earlier this morning. So if we just look at where we are, that's going to bother me. Let me get rid of all these. It's because I have a computer open in the other room. So just today. So we'll just say beginning of the New York session. Markets as a whole taking a bit of a dip today. Yields were up, gold is up. There's some talk about the bridge that was taken out, and that's greater macro implications. I don't want to talk about macro right now, but I do think it isn't in our favor if we're seeing the NASDAQ, the Russell, and the ES losing ground, and losing ground rapidly. So seeing some kind of one-way type of behavior throughout the session, it's not really good for risk assets to see equity indices get smashed. Obviously we haven't been tick for tick correlated, but I do think that there is, just markets as a whole are obviously all interconnected in some way or another. And when we see that equities are doing well, continuously moving up, then people feel like crypto has permission, or rather is in a good environment, at least to continue moving up as well. But this morning, more importantly, crypto wise, we saw significant liquidations in BTC. So, this is, I think intraday when you have these kind of liquidations. So when you have, I think this is to the tune of like, what was this? Let's see, about 10,000 BTC. So 84 down to 79, and that's just on Binance. But I think it was like 10,000, 12,000 BTC worth of positioning liquidated again earlier this morning before the session. A lot of times that's going to leave a gap, so it's to your advantage to bid liquidations, but we've managed to continue to move down, and it looks like what we've done is we've seen a liquidation occur, and we still have that sort of Pavlovian response by the market to look to buy any dip, which has not been rewarded so far. Again, not helped by the government moving coins now. But BTC, I mean, not for nothing, we are still within a high time frame range. So we saw some selling at VWAP today. Again, for the beginning of this week, or I should say, what's today yet? As far as this week goes, we're under VWAPs. So sellers in control right now, but still bigger picture. That OI wipe that we saw actually took us down to the lows of open interest where they were back here during this 20th, 21st, 22nd lows that we saw in BTC when we had a liquidation sort of positioning wipe back then. So open interest levels back down to that level, which is somewhat useful to identify things like that, the range rather, to identify the range that open interest is trading in. I don't really have any kind of strong beliefs right now with BTC. We're back below, we're obviously below prior all-time highs. Market's been ranging for a month. There's really a ton of dispersion in the market. So there is pockets of outperformance, but we haven't had that sort of rising tide that we've had during prior bull markets where we've broken all-time highs, where you see like this major retail rush and everything goes up because retail has no idea what they're buying, or new retail is buying indiscriminately on Coinbase and just buying anything, usually based on a lower unit value, because they assume that lower means cheaper. Obviously, if you've been around long enough, that price actually, a high price or a low price has nothing to do with something being cheap or expensive. But there's been a ton of dispersion. The sectors that mattered, I hear my daughter in the background. AI, RWAs catching a bid in the last, a pretty sustained bid in the last week and a half. That was after Larry Fink's sort of tip of the cap, wave of the hand about them on CNBC, or the tokenization of real world assets, and by proxy, the current RWAs in this market catching a bit after that. Memes still very strong though. So we saw WIF bounce at $4, nice round number. WIF bouncing, Myro doing well. Doge has been in a pretty nice position over the last couple weeks. I don't really think that this is going to change. I think that I know I'm probably just touching on a little bit of everything in the beginning, and I have a tendency to do this when I haven't streamed in a while. Just riff. I'd expect what's been performing well to continue to perform well. I know everyone's waiting for some kind of major rotation to different sectors, but I would just assume like the flavor of this cycle so far, you could usually bet on that continuing to overextend, whereas a lot of people are trying to outsmart the market and identify where the next major rotation is going to be, versus just assuming that people's current interests are going to remain their interests for a little while longer, or a lot longer. So I would continue to monitor meme coins and AI and RWAs as the areas to bid when we have sort of sustained broader market liquidation events or larger pullbacks. So not going to change much there as far as like where I am focused on in this market. As far as where BTC sits over this last month, again, approaching the lows of the range, approaching an area where OI has bottomed in the past. There's a couple things worth pointing out. I guess bigger picture is that, and again, apologies if I'm touching on a lot of different things all over the place. Last week was the first week that we had buying across the board or positive numbers in the ETFs. Before that, it was a week of red. So we had a positive week last week, and we're starting off this week again in the red with some pretty heavy GBTC selling. It could be now because we've seen a pullback in legacy markets that, again, like I've said, I think that because we have an ETF, we'll probably be more correlated to those markets as we get more integrated with them, and you see more penetration and portfolio structuring with BTC amongst other TradFi instruments. So that's important. We're around a period where you might have some rebalancing because of quarter end, new quarter. We're approaching a period where there's going to be some pretty important 13Fs that are going to be public, and that's going to give us some kind of indication as to who got involved, if there is anyone that significantly bought the ETF from a either fund, firm, corporate type. So it's going to be pretty obvious soon if there's been a major retail pickup in the ETFs or if it was actual institutional types. Then we have the halving coming up, obviously, as well, right? So April month halving. But one thing to kind of just remember is that everyone's been long into this for basically the same reasons. The ETF, and then it's okay if the ETF trade gets tired, then we have the halving to look forward to. So stay long into the halving. Then after the halving, we're approaching the summer months, and the summer months are historically just, they're not the best months for crypto, right? It's like the whole concept of sell in May and go away. It actually has, statistically, is significant in markets. You'll see returns from May to September versus returns either in the beginning of the year or after that period. Those returns, summer months, tend to be just a little bit more lackluster. It's not a very significant difference, but it is a difference nevertheless. So I guess I'll stay more specifically on BTC first. Just sustained selling across the board this morning. Again, large liquidations, but we saw that Coinbase premium begin to shrink. One thing worth pointing out is that up until this was April Fool's Day, quarterly annualized rates were at 35% on Binance, which is pretty nuts. So in the past, quarterly rates, so these forwards, these further out the curve, we're talking about the traditional futures contracts. When they're trading this high above, and we've gotten above 20-25%, a lot of the times that has marked at least interim term tops. We don't really see this continue for long, and there's a couple good reasons, right? It's an indication that there's a lot of leverage building up. We already had leverage building up in the perp products. We saw that with funding being elevated for quite some time. We have a bit of a washout there, but then we've seen, again, this extend into different products like, and there's different forms of hidden leverage as well in alts, but extend into different products like the quarterlies, which they don't have a funding interval, so there is no funding rate. So they will trade away from the spot market or the cash market. So they'll trade at quite a premium. In this case, the premium when annualized is over 35%, which is pretty nuts, because what that does is it begins to sort of beckon the other side of the market with size to sell futures at those levels, right? You have people that are longing using the quarterlies because, again, you don't have to worry about the funding, so they get in early enough. The premium, that we see that premium expand, and then for anyone who is not long, or for anyone who is long, there's a compelling reason to close out and to place that basis trade or that carry trade, where you are essentially, if you're long spot, selling those futures contracts against your spot. So you're basically delta neutral. And the idea, obviously, is that the futures price and the cash price will converge over time. So you will see, if you have a market that is in contango, it might look like this, right? So here's the spot market, 1 month, 2 month, 3 month, quarterly, right? And this is trading at a premium to the spot. And over time, what happens is that quarterly, that return profile looks like this. It rolls down the curve. So here's your spot price, let's say 60K BTC. And then here's your futures contract. Let's say it's at 70K. And then by the time expiry arrives, either, the spot price has met it by moving up, or the, combination of both, right? Spot price moving up if prices are continuing to move up, or, prices sideways moving down. You see that futures price continue to roll down. The point is this gap closes. And if you're long the spot, if you're short the futures, you've captured that ARB as that premium has closed, that basis is closed. So that becomes compelling to anyone with size, because it's basically a risk-free trade. It's not totally risk-free, because there is counterparty risk, there is basis risk, which is not something you often see, but there's definitely risk there, but it's as risk-free as you can get. It's not exactly, 35%, right? Even though that's the annualized if all things remain the same. And then you have to consider, what T-bills are offering, to really get a clear idea of what that trade looks like from a return standpoint. But it's very high. And again, it's a trade that you could put size on. So for people that are not looking to trade meme coins to make, to turn 4-figure portfolios into 7-figure portfolios, if someone has 8-9 figures, that's a significant amount of money they could make trading just Bitcoin. So again, it invites the other side of the market to come in and slam that down, which is what we actually saw right here. We saw, a good amount of that premium come off. We're trading back above. We're still above 20% though, annualized. So it's still forwards. The futures curve is still quite elevated. Further out the curve, those products are still quite elevated, and we are having trouble at the all-time high. Again, we're approaching a significant event that people have been long into. I wouldn't be surprised. I guess my point is, I wouldn't be surprised if we continue to chop around, and maybe we even test sub 60K again. I don't think that would really matter big picture. I think you would have to really lose. I think you'd have to lose like much lower levels, like 55K, off of a really significant move to really start creating a sense of panic or worry in the market. And that's just going back to the current yearly VWAP, which, we've been holding one standard deviation of that now for the entire time. We've been holding, our significant moving averages, some of the tools that people with trade trends might use. So the market has been really strong. It's not like it's not strong right now. It's definitely taken a breather, and we're seeing a little bit of momentum come off. And again, leverage it's still there. It doesn't help when you have, the U.S. government coins moving. If we have some big names, so there's a couple ways that we could look at the 13F filings coming out, and that's in May. So I think around May 15th, we could have big names having picked up the ETF, and then you might have people look at it like, okay, so price is stalled, who's left to buy, right? So it might be, it almost might be better for this market to see that not a whole lot of institutions got involved yet, because we could always say, oh, institutions are still coming. Versus if we have a bunch of saturation and the market is kind of looking like it's, again, momentum has died. It's kind of a matter of, all right, who is left to buy, at least in the short term. Maybe markets have to sell off a bit more before they can move up. Obviously, we have the ETH ETF that is another catalyst that the market is, some of the market is anticipating will come through in May. The ETF bros don't really think too highly of that, or rather they're not pricing it as such. But that gulf is good, though, because if we do get an ETH ETF, there's not a lot of people that are positioned on behalf of it getting approved. So if you look at the ETF bros, the Seifert and Balkanus, whatever his name is, the guys who have been calling the BTC ETF the entire time, I think the fact that their probability of it going through is sub 50%, it obviously leaves a lot of meat on the bone if it actually is approved. Versus, if it was sort of in the bag already, if they had it rated much higher, then maybe we'd see more of a sell the news response. Either way, I don't think there's a lot of people positioned behind the ETH ETF. I think more people are positioned behind ETH being some kind of beta to BTC, although there's a lot left to be desired for that trade over the last cycle, because ETH has largely underperformed BTC for a majority of the time. So this is how I'm looking at a lot of my charts lately, by the way. I think this is the best way to look at if you're trading, to look at any kind of asset, if you're trading something, outside of scalping, right? So to have more of a holistic view, have a bigger picture view, get an idea of context, you have your lower time frame chart. In this case, for everything over the last few months, I haven't looked below really a 1 hour chart. Sometimes a 30-minute chart, maybe a more precise entry, but my lower time frame chart went from, your tick charts, minute charts to hourlies, 4 hours. But then having this daily and this weekly. And unless something really changes on the weekly, again, there's no reason to be that paranoid. If you look at the last 2 quarters, is a good example. I think we only have 1-2 instances where we've had 3 successive days of red. So almost 99% of the pullbacks that we've had over the last 2 quarters have been 2 days, and that's it. So, you could throw money at this based on that alone. We've had a decent sized pullback in BTC, wiped a good amount of open interest at a level where open interest had bottomed more recently for one of our more significant lows within this range. And we'll be closing out 2 red days in a row. On balance probabilities, it's been pretty favorable to buy this setup, at least for some kind of mean reversion in the short term. And again, I think that the summer months, I don't think are going to be that rewarding for BTC. If we were going to continue to rip up, I think that would have happened already. I think we're starting to really push the limit of consolidation before continuation with just everything going on right now in the market as well. Like, again, there's a whole lot of dispersion. Meme coins have, absolutely printed. I don't think that money is sticky in meme coins. I don't think that money is going to be conservative and just completely exit the market. But at the same time, like, I think that the market overall is losing a little bit of momentum, and maybe we see sort of a deeper pullback across the board. We saw ONDO start to do really well, slap down at a buck, which is, round numbers in crypto are very important. Almost in all markets they are. Let me just try to get my bearings on where I want to take this stream. If you guys have any questions, obviously ask them, and I'll definitely get to all the questions by the end of the stream. I wanted to keep this as a casual stream. We see pretty stacked again on the way down. So round numbers, you're going to see the biggest stacking. For anyone who is not familiar with the round number significance, if you look at a tick chart intraday of any asset, you're going to see that people will trade around round numbers more than anything else. So whether it's entries, exits, you have to just consider that it's almost a lazy, it's almost as a result of lazy decision making. The same way that when you're like filling up your gas at a gas station, if you're doing it yourself, a lot of times you're going to stop at 0.0 versus, hey, I want to put $50 in my car. that's a little, you'll see that more often than, hey, I want to put $51.13 in my car. It's just a thing that people do, right? Gravitate towards round numbers. So it pays to keep attention, or rather pay attention at significant round numbers if we're approaching them either from above or below. And ONDO is a good example because it got slapped down at a buck. But all the way down, I mean, Binance, some decent stacking, BitFinex, Coinbase. It was quite overweight towards the highs. So we had funding elevated. We have forwards elevated, price, some weird price action, and just a whole bunch of stickiness above us. So it just doesn't look like we're going to see that let up anytime soon. Again, this can pull back even more, and it wouldn't really change much. You know, I think you would have to really see some kind of loss and retest of this range. I mean, we've had multi-week consolidations before where we've retested the lows numerous times. For anyone who's a price action trader, or just, if you know, you pay attention to some of these stats, it's unlikely that you top out like this, where we have, so zoom this in a little bit. So basically the market one time framed, or from the open of this week, was down only. All right. So you have, so here's exactly where the open was, right? So this is the week, this is the open. Maybe a difference of, let's see, $12 from the open to a high that we put in before being basically down only. So it's a target, right? A lot of times this is a target, or it's a potential area for a stop run. It's just unlikely that you see that the market one times from either a daily open, a weekly open, and never returns back to that level. So for anyone who's thinking, hey, maybe this is like the top of all tops, it's more than likely that even if it was the top of all tops, you see that level return to cleaned up, rejected, and then continue down, versus us just open from, you know, that is essentially, that's not only the weekly open, that's Monday's open, right? And have no wick, right? We've just been down only since then. And sellers have been rewarded into that, so haven't been really tested. So the idea is any positioning that's sold from the open of this week has not really been tested on the way down. Very minorly. Like we've cleaned up some of these inefficiencies on the way down. Like you have, you know, these breakaway candles, it leaves kind of a gap in the book, air pocket. Clean that up, trade back in, fill that up. Same thing. Take out lows, gap down on the hourly, 30-minute chart. This would be if you were looking at like a TPO chart. You don't have to have a TPO chart to know that, for example, an area of no interruption no interruption. So right here, and then right up here. This would be a single print region. You'd have multiple single prints that you would look to say that, all right, so this is an area where you'd look to initially see either rejection or reclaim, and then ultimately clean that up, fill that out before maybe resuming down. But air pockets tend to get revisited and filled up. And if you think about it in terms of the market being inefficient and then cleaning that up and filling those inefficiencies, it makes a little bit more sense, right? As price tries to find fair value, and we see that auction back and forth. So part of my job as a trader is to identify what conditions we're in, whether we are balanced or whether we're imbalanced. It's been the case over the last month. It's obvious that prices found some kind of balance. Most of the volume done for the last month is right around this level, actually. So if we were to take like you could sort of see it where this profile is, right? So you have, if you were to just isolate this range up here, right? Where's the POC of this range? It's right around 67, right? So 67 to, you could take like a fixed range profile and see the same thing. So just where price is trading within this range. So I mean, your high volume area where the most turnover occurred, that's like as close as you're going to get to fair value. So it's good that we're kind of building that below, but you want to see obviously price continue to hold that level versus seeing that accumulate at the high. And then, if you're looking at that with open interest, and open interest hasn't come off much, but you're well off the high at that point, it's a good case maybe that you have some underwater positioning that is yet to puke. I think that we are kind of testing the level of commitment to the more recent positioning added up here, because we're We're trading slightly below that level now. We've seen a good amount of open interest come off. But I don't know if we get well away from that. You could see, again, how the extent of that late positioning up here. Either way, the point is that we're approaching a level where it'd be reasonable to expect price maybe chop around, base out again, and then there's no reason for this thing to just about face and return to lower levels before, like I said, maybe first cleaning this level up or chopping around longer. If you look at market highs, right? If you're someone who's in the camp that this is the all-time high and that, we're done, you're looking at like at least a month or two of price distributing, right? They're not just going to, market's not going to just turn around about face and that's it. And that's your high. Unless it was a major derivative fueled rally to begin with, where you have some kind of exhaustive blow off top. And we don't have that now in a spot driven market. You're not really going to see that as much. So even if this was the all-time high and we just managed to put in this embarrassing new all-time high above the prior, you would see the market do what it did previously. It's going to spend a lot of time up here. It's going to give it a lot of chances to exit, which I think, is a good reminder for the people that are bullish that you're going to have a lot of chances to enter too, right? I think you're going to get some pullbacks like this one included, that will look really good by the end of this year, right? When we're trading, I think what we'll be doing is trading higher. I mean, there's a couple other things, I guess. So funding elevated forwards, a little elevated still. So more reason to expect a little bit of chop. The options market, a little bit of a cool down, shift in skews as well. So more protection bought. We saw people really buying like far out of the money calls into the end of the year, 100K, 90K, 100K. I think that kind of coincided with annualized rates being very high and people just reaching, as they always do, like looking miles ahead instead of like the more reasonable, closer targets, which is kind of, again, just a sign that maybe we're going to cool off for a little bit. Let me look at the chat and then move on to some other pairs. Happy Tuesday. No buzzing. Good. Glassnode tweets. Government wants you to be poor. Worldcoin. So I'll touch on that. So Uniswap summer. Yeah, that would happen. And beyond Solana. So for anyone who's waiting for, so I think there's a lot of people that are like in this ETH camp, and just because you say Uniswap, I'm thinking of ETH. That eventually the market's going to come around back to ETH. Like people are going to come back to ETH. I think again the last time I streamed, right? So one, I went from a person who just didn't like memes to flipping my script on WIF, right? When they put the hat on the bull, and then the last two streams I did. When we had pullbacks, I'd said I would just anticipate that the things that have done well, the memes continue to do well. So in that vein, I would anticipate that if we have some kind of, again, because the money that's in memes, I don't think it's going to be sticky across the board. I think that's a form of hidden leverage. All the new tokens that are propping up and they're starting to try, there's a ton of exchanges are being approached left and right by small projects that are memes that are created like a week ago to get listed. So I think there's a lot of money getting spread out, but the money and the capital that was created in the major plays, I think that's not conservative. That's going to find its way in that's going to find itself in other pockets of the market. But I think a lot of that's going to continue to take place on Solana, unless we see some kind of major rush on Coinbase. Again, retail onboarding that everyone's waiting for, but I think a lot of people are hinging too much on, and then that maybe finds its way into Base because of that. The fact that Coinbase will abstract away all of that experience that you have when you're normally trying to leave an exchange and then, use wallets outside and use some of the L2s and platforms. So yeah, type of Uniswap summer would be nice. Listen, you could look at it this way. The fact that, Bitcoin is at 65. So Bitcoin at 65,000 versus it being at half of that, right? Versus Bitcoin being at, let's say just using prior references before all-time highs. The market moving through the all-time here is obviously much different than where we are here. There's a lot more capital behind this now. The market cap is much higher. It means a lot more now that we're at this level, right? There's a ton of money in this market still, right? In position. The idea is that there's a ton of money still in position that can fuel multiple rotations moving forward that we haven't yet to see really come off and out. So, there's a lot of money in Bitcoin that's, I'm sure, in the ETFs, and that's helped us get to this level. But there's also, we still have a ton of overextension in Solana, in meme coins, right? And that capital, right, is going to find itself in other areas of the market. And I think that because we're still kind of just off the highs, you could look at it that way and say, all right, well, at least, again, it's very unlikely that this market is just going to completely reverse. So we have a lot of trading still ahead if you're just patient, right? Because that money's going to go somewhere. It's not just going to go right into stables. And even if it does, it's going to find itself. You're going to be able to spot if you're just going to want to look for the fastest horses right when the market begins to bounce, right? And it's probably going to be that they go back into the last fast horses, right? Or fastest horses. Let's see, Jupe Summer. End first quarter, beginning of second quarter. I'm not sure what you mean, Ross. How did I change this by accident? Okay, it was set up differently in this chart. So by the way, so this is still on the chart. So all new pairs, like I said, the trade was very easy. So between ONDO, buying new tokens that have a low unit. So in this case, right around the 48 cents region, ONDO is between 20 and 30. Buying them in the beginning when they begin to show any signs of basing out and just not being destroyed, so the chart's not getting destroyed. Very easy trades. And I think that moving forward, like the pairs that have healthy looking charts and are new are going to continue to do well. So Jupiter is a good example. Jito, ONDO. I guess what I'm kind of touching on is I said earlier, some people are looking for the next big rotation into areas of the market that haven't shown any signs of life yet or haven't been shown any signs of love yet. I wouldn't try to front run any of that. So whether you're like buying into ETH beta right now, or you are, buying some random fucking L1 or L2 that hasn't been shown any love yet, hasn't had any kind of signs of life yet, and you're trying to front run, money finding its way there, right? I would stick to what has been strong from the beginning, and what has a fresh chart, honestly, as silly as that sounds. But for anyone who's traded long enough, the effect of a broken chart in this market. RWAs, like I said, they started showing signs of, and I guess I would just say is like a more sustained bid recently. So for a while, like ONDO, pop, ONDO sort of seemed like maybe there was the same market maker agreement as Worldcoin in the beginning before they changed the arrangements for Worldcoin, some of the options arrangements, and they could no longer keep price suppressed or it didn't benefit them to. I think ONDO had sort of the same, it looked like it had the same characteristics, but for a while it was just, RWAs from a narrative standpoint make sense. Like, I don't care about the actual fundamentals or the details as much as I care about something being a narrative that people can fall for, right? AI, very obvious, right? Every single day you're hearing about AI, you're getting to play with it now, whether it's some kind of image generator, whether it's ChatGPT, whether it's just paying attention to what's taking place in traditional markets. It's very clear that that's an area that had the opportunity to do really well, and have no substance behind it whatsoever, but just be related to AI, right? Because we know how this market is. Same thing with real world assets. You hear Larry Fink, while he's talking about, having the Bitcoin ETF, the, very real trend that is going to happen, it's just going to be the tokenization of real world assets. And you'll have things trade the way they trade in crypto in legacy markets. There is obviously a benefit to the blockchain that, we're not maybe buying into on a daily basis, but traditional participants have looked at and been talking about for a while. That just hasn't really been something we speculated on as much as we're speculating in it. But RWAs, again, they were kind of underperforming for a while. And then over the last, this is going back, this is the last, like I said, week and a half, maybe. There's a zoom in, a zoom out, and then zoom in. So the end of March, the 20th, you can see where the major turn was, right? So we had token, true, dusk, just some things that I have on my little sector breakdown. ONDO, again, moving up to $1, was around the 20-30 cent region for a while. So I think that this is what you're looking at: AI, RWAs, and memes for the foreseeable future. Again, I wouldn't try to jump into some other crazy pocket of the market. Although there's talk of, Ethena was listed today, and that could bring back some interest in, I don't want to say it with some kind of negative connotation, in things that actually have a little bit more substance to them. Even though this is, pretty much a basis trade, it's one that you don't have to worry about placing yourself. So this was just listed. It's on KuCoin now. I think it's on Poloniex, of course. I'd keep an eye on this because it has been talked about for a long time. Again, new pair, you're going to see some kind of washout in the beginning, but there's a lot of capital that is still sitting pretty, looking to deploy into the next hot thing. And I think anything that's new and been talked about for a while, you have to have it on your watch list. And I personally need to have a position, at least a starter position, so it can be real for me, versus just keeping, like a loose view on it. But so far looking healthy off the listing. I mean, if you look off the KuCoin listing, this jumped up 30%, a little choppy right now, but it's very early. I would expect that based on like you can see, I don't even have this chart set to weekly, daily, 1 hour, 4 hour. Based on the amount of attention and, just conversation around this, I would expect this to do really well. So, I'd be shocked if it didn't. What else? Again, let me just check your questions because I didn't really have a goal for this stream. Did a lot of rambling in the beginning. Silkroad funds, like I said, market having a knee-jerk reaction to that. Send to Coinbase Prime. Like I said, though, in the beginning, also, I said, I think that you're going to see the government's going to want to sell at some of these higher prices. So I'm still in this. I don't want to shill my bags, but this stood out to me. And it's kind of for a bad reason. I didn't get in it right away when I pointed it out in one of the group chats I was in. But when I was scanning Solana, I noticed this. Its first day. Yeah. It was first day. It was 8 hours into it. And it had it was like a $250 or $300 million, FDV, or market cap at the time. And it was very confusing. It seemed like that wasn't organic, right? So I don't know who specifically is behind it, but although that didn't seem organic, right? Not like a true meme coin, that immediately set alarm bells off my head as, okay, there are this many people involved early that are going to have a vested interest in making sure that this thing at least marks up a 2-3x, at least, right? So this is just one of those things that I'm long because I think they're going to engineer higher prices for this. Now, you might have an opinion on that, right? Whether or not that is scrupulous or unscrupulous behavior. But I mean, it's crypto, right? And I'm not talking about my behavior, but I'm talking about just, we know how things work here. And sure enough, this ended up, I think this hit just shy of $1 billion market cap. So with, I'm not someone who trades a ton of stuff that's on chain or focuses on much of this at all. But it does pay to consider these sort of thresholds, right? $1 billion market cap, probably a good idea to sell, especially if it's come from 250, right? So there's certain people have rules with when they get in, when they get out, based on, hey, has it been able to hold a $10 million market cap? Okay, it's probably going to 50. If it holds a $100 million market cap, it's, there's certain very simple heuristics for this that people seem to adopt and tend to work out for people specifically just trading on chain things. But if this can hold 500, I think it's going to make its way back up to $1 billion market cap. And again, I don't know what's going on with this, but it started right away with a ton of liquidity and that pretty wild valuation. So I don't know when I'll exit this, but I'm still in that. I'm in Puff. This is something that I share. This, Jordi Salini, you guys are familiar with him. Jordy Alexander. There's some interesting, or I would just look into this. I don't want to shill my own bags. I got in early. You'll see me share it from time to time. What else? There's some other, just trying to remember what I wanted to touch on. See, this is why you have to have a script if you're only going to stream once in a while. Let's take a look at WIF, actually. Well, let's take a bigger look, actually, at just the market funding. Hear my daughter outside my door. So a little bit of a cool down, which is good. So this cooling down, right? Ideally, you don't want to see spot BTC continue to get sold. You know, it's Tuesday, so maybe we have a kind of a turnaround Tuesday in legacy markets, although we haven't had that yet, and it's midday. And it's a unique week because it was a holiday weekend, so it's not like Thursday, Friday selling, you know, and then a bounce on Tuesday. Yields up, gold up, like I said, so some weird behavior in macro world with oil as well and the dollar. So maybe that's spilling into crypto a little bit, but things have kind of reset alt-wise. Again, I said that open interest did come down to a local maximum sort of for the prior pullback on the 20th to the 22nd. So that's always good to see that positioning reset. What else? There was something else I was just going to mention. Forgetting it now. Oil impacting today things. All right, that makes sense. Yeah, no, the Silk Road thing didn't impact. The Silk Road thing is not responsible for that move down. The Silk Road move was literally like 10 minutes of price action in the market. Excuse me, in BTC, like right here, where it just looked like it was going to maybe take out that low again. I wouldn't really pay too much mind to the Silk Road thing, but it was just the last thing shared on the timeline before I came on the stream, so I figured I'd pull it up. What did I want to talk about? Oh, WIF. Where's my WIF? There we go. So, I mean, to be honest, this still looks healthy. The trend is still intact, high time frame wise, and I think that people have been calling the top on this thing the entire way up. And we haven't even had more than one inside week. I mean, this has just been moving up, consolidating briefly, moving up, and I think it's because people are looking at this as like the Doge of Solana now. You know, you're trading further out the risk curve, your shitcoins on Solana, and then people are taking profit as their main risk, like sort of riskier asset into versus into just Solana, taking their profits into WIF as well. And this doesn't even have, and this has kind of been one of the reasons why I've said you still have to be bullish on WIF. It doesn't have any major centralized exchange listings yet, right? It's not on, well, it's not on Coinbase. Okay, so it's peculiar that it's not on Coinbase. And then is it even on Binance? Spot listings are what I'm talking about. It is on Binance, but it's not on Coinbase, which is kind of weird. But yeah, as long as, I mean, I would continue to say buying double-digit dips in WIF is going to pay off at least intraday. You know, could this be the beginning of another chop solidation period? Absolutely. But if you get that chance to buy a 20% pullback, you know, this is going to be the thing that you probably see continue to be the fastest off the lows. All right. So if you're not familiar with what to buy, or rather where to even look, I should say, just go to just look over the last couple weeks, find a local low, and then open up one of these spaghetti charts and just look at who is coming the strongest out of that low. So, you know, for example, we'll just look at today. Let's go to really intraday, 5-second chart. And here's Bitcoin's low. Not 5 second, we'll do a little bit more zoomed out than that. So here is the low, which was made around, so we'll actually do a 5 second, that's fine, it'll fit it. So here's Bitcoin's low. And now who's the strongest out of that low? It's very obvious right away, it's WIF, right? Solana up almost 2%, WIF is up, you know, just over 7%, messing around 6-7. So, you know, keep monitoring what you'll probably see is if you keep monitoring that it's going to continue to be that way. And then maybe, if anything, it's time to pull off a little bit when you stop seeing that WIF is strong out of the lows, right? Or it could be any other coin at any other point, just for something to use moving forward. That's one of the benefits of using those relative performance setups. Relative performance, I mean having your spaghetti charts like this, is to actually get a little bit more granular with it and to zoom in at either significant highs or significant lows intraday, right? To see who's sort of storming out of the gate the fastest. And like I said earlier in the stream, just don't be one of those people that's trying to outsmart the market right now and look for the thing that hasn't moved at all and saying, okay, we're in a good dip, this is what I'm going to buy. It's going to be beta to BTC or beta to ETH. No, just expect that the things that are strong are to continue to be strong well beyond you're actually comfortable holding them. So yeah, I mean, there's a lot of easy setups in this market, and one of them is just buying liquidations, and then not just buying liquidations in the largest liquidation pair, which would be BTC, but to know the fastest horse out of the gate, to buy that during Bitcoin's major liquidation event. So, Bitcoin has, I always think 10K is a good threshold, right? Over 10,000 BTC liquidated, worth of positioning. You're going to see that there will be some mean reversion off of that. And then you want to buy the strongest pair during that, or rather, trying to time that as best as possible with something like WIF, or some other time it might have been with Worldcoin, or some other time, any other cycle. It could have been Solana. It could have been last cycle. It would have been Solana, right? You had FTX at your back during those liquidations as well, helping you out. So I just would anticipate that is going to continue. But one new pair that I'll really focus on and give a little bit more attention is definitely Ethena. What else we have? So we have an inside week break with Solana. I don't think we have. Do we have this with Bitcoin? No inside week. Maybe with ETH. No inside week, but we do have an inside week break with ETH. So what I'm pointing out is that this is really tight. So this week closed inside of this week, and the setup, usually for a daily setup, just see me commonly taking these, is that low used as an extreme and that high that it's inside of and engulfed by that previous candle being used as a trigger point for a continuation move that is either to that local extreme at the high or breaking that low, holding outside of it and moving to the other extreme at the low. So the idea is, like, this is just a crude method of determining balance and positioning building up. It's very tight and it's funneling. So invalidations are getting closer and closer as you approach that point. And invalidations mean, stops up here, stops down there. As soon as you trigger one, if it holds, a lot of times you're going to see, you're going to be, whoever got involved here, one side is going to be very wrong, and you're going to see that puke either result in the move to the extreme previously at the low or at the high if it's a short squeeze. So for Solana, the idea would be, if we continue to hold below 180, which I think is a good level, that we will probably approach this 160 level. Now, all that aside, I mean, the most obvious thing that stands out to me actually about Solana is that we have just these really even highs up here. Weekly structure, just nice and flat. I mean, there's really no margin of difference up here. So I actually look at this more like whatever dip we get here in this region, if we get something that low, like this is such an obvious target that we're going to return to. So there's few times where you could look at a chart and say, it's almost like very certain that higher prices are coming, right? And I'm talking more than just being confident, but statistically, you will not see often that something like this gets left behind. Very, very infrequently. I can't recall a time when you had a structure like that that has not revisited the highs, at least, to put in something that either from that point breaks down after leaving an exhaustive spike or gives you that continuation play. And it doesn't take much in crypto to validate these claims when there's not much history at all, right? There's not much history at all. It doesn't take much to look back and go, oh, okay, yeah, we've never had a setup like that didn't result in continuation, or that resulted in an immediate reversal and was never returned to. So I guess the consolation of that is, or if it's any consolation, it's to someone who might have longed up here and is really underwater, hopefully not in leverage, but is wondering if they'll ever get a chance to exit at better prices. Anything else? Let's see. ETH BTC continuing to make new lows. As I've seen the smartest traders try to call the lows on this now for the last who knows how long. Just don't. Don't try to predict. Just react. Just wait for the other side of the V when it's actually put in a very significant bounce. When it's starting to rebid and trade back above levels. I don't really care to trade this chart, period, but some people really focus on this. I think people are... They think it's... I think that the market has been very easy for a long time, that people take for granted that it is easy, and they just assume that it's... it's going to sound really stupid, but that it is that easy. I don't know how to put it without... I don't know what way to put it right now with my overtired, over-jiu-jitsu'd brain. But... The past of ETH being performing really well, it might have been, it very much be in the past at this point. Like, people really like Solana. I guess you can't compare them perfectly right now because ETH obviously way more adopted, way more use. It's definitely validated through time and use at this point. But Solana is the flavor by this cycle's participants. So I think there's a lot of people that are anticipating that ETH is going to eventually catch up. It's going to eventually have its time in the sunlight again, or the limelight, I should say, and just blow everyone's minds, right? And like I said with memes, just anticipate that trends will probably continue for a long time, and trends of weakness as well. So I wouldn't just... I wouldn't try to front run strength in ETH, meaning, I've been talking about ETH flipping of 2150 for a while, so my ETH positioning is good. But for anyone up here trying to position, anticipating that this changes, right, that ETH starts overtaking BTC in terms of strength, I think that's very risky. I think you need to see a lot of evidence first, because again, the market doesn't believe that. The market thinks that ETH is bulky, it is expensive, and current participants don't want anything to do with it. So yeah, an ETF would really validate it and maybe change the script, but it just isn't the way things are right now, and you have to trade what's right now, not what you have to trade what is and not what you wish to be. What's up, Asgard? How's it going, buddy? That was a whole lot of talking to say a whole lot of nothing. I apologize, but... So we got Doge. Doge high time frame, this high time frame breakout in the past, these lows put in long-term bottoming. It's always good to buy Doge, the bear market lows, always good. I mean, I was saying this when we were around 6 cents, and I'm sure it makes sense now. But this is the first major correction out of this, multi-year range. If you are not calling a top on Bitcoin, you can't call a top on Doge. So I think it's more than likely that maybe this does chop around above this range. So maybe we start testing again that 13, 12 region. But as long as we're trading above this multi-year range, and we're talking like, 12, 11, I think that this is just going to be on maybe a windier path back up to all-time highs again. I don't know what the target for Doge would be, but I think it's gonna hit 50 again. It'll hit 2 quarters. What was that called again? It's $0.25 and $0.50 coin in the United States. $0.50 coins. I used to collect them when I was a kid. So stupid to think the money would be worth more than the money, right? Oh, you gotta save this penny. It's a 1960 something penny. It's gonna be worth more than a penny. Not quite. But yeah, I mean, I think I've kind of touched on a few points that I wanted to touch on. there's still a good amount of selling around today's VWAP. So whether that's a sell program or someone taking profit, you know, well, it is obviously someone taking profit, but whether this is going to put in a longer term top, I don't know. There's a few things that make me a little bit more risk off. Again, it's a really easy setup to just say, hey, I'm going to be risk on again if we're back above, you know, in this case, last week I was talking about holding 70K, you know, the idea of prior all-time highs. But I think, you know, you could step away from this market, box this out, and say, I'm not going to do anything as long as we're in here. And then I'm just going to get risk on again if we're closing back above these range highs. And yeah, you might miss some of the leg of, you know, the trade. But the amount of certainty that the market will have at that point, I think, will lead to the next major leg beginning rather than expecting a fake out and then just falling back in this range. So if we chop here, even if we return to this low, even if you do nothing, I think you have a chance to print a whole lot more. How do I put this? Sorry, my daughter's distracting me by crying in the other room now, and I'm losing my words. I'd rather be a little bit more conservative as we chop around here, not try to capture every rotation, and then just get really risk on again if we're holding these highs. You know, and then everyone's looking at this and then looking at the prior cycle, you know, consolidations around all-time highs, and okay, this is in the rear view. If legacy markets at that point are, you know, back above, you know, we see ES back above 53, NASDAQ, you know, trading back above whatever the highs were in the NASDAQ, or the highs, 18.7. It'll look like, okay, we've kind of weathered that little breather period, and it's off to the races again. Anyhow, I think I've touched on everything I wanted to touch on. I think so. Someone mentioned Worldcoin before. Like, some of these pairs are just starting to put in what are reasonable pullbacks, right? Sorry about that. But we're not near any kind of major breaks in market structure. Like Worldcoin, for example, pretty clean structure on the way up. You know, market maker agreement changed down here. Had that markup. This is a really nice retest. It could come all the way back down to $5 and still be good. I still think you want to buy dips in the things that were the strongest and that are new, right? So this is a weekly chart, but there's barely any price history. This thing is brand new. If you're anticipating the bull market continues and we go through maybe a breather period over the summer, I think you're going to be rewarded if you buy dips in the leaders of each of the sectors that have been the strongest. So AI, RWAs. So if I was going to pick pairs, I'd say you buy dips in Worldcoin, you buy dips in ONDO, you buy dips in WIF, and I think that you're good for the end of the year, right? Where you're looking better in the end of the year. If you were just told you had to leave your desk right now and make those decisions, I think that I could confidently say I'm confident that those will be higher at the end of the year, regardless. So anyway, I'm going to wrap it up, guys. It's been a pleasure to get back on here. Hope you guys enjoyed the stream. A bit all over the place, but you guys know how it is. If I do these consistently again once a week, at least once a week, that's not much. Maybe I'll try to have more of an agenda again, but I figured for the first time coming back in a while, I'm just going to answer questions and shoot this shit. I think that was everything. Okay. Until next time, have a good evening.